All right, let's dive into something huge. We're talking about $1 billion deal that's completely changing the game for Kenya's most valuable company, Safaricom. And believe me, this is way more than just a corporate shuffle. It's a massive gamble that could literally reshape the future of an entire country. At the core of this whole thing is a question every single country has to answer. How do you actually pay for the future? I mean, you've got these big plans for new roads, better energy, all these opportunities, but where's that cash come from? Well, as we're about to see, Kenya's answer was, let's just say it was really bold and maybe, just maybe, a little bit risky. Okay, so who's actually involved in this massive deal? To really wrap our heads around it, you've got to know the four main players sitting at the table. First up, you've got the prize itself, Safaricom. This company is an absolute giant in East African telecom. Then you have the Kenyan government, who is a huge shareholder looking to make some serious money. In the background, there's the parent company, the global behemoth Vodacom. And stepping into the ring, the buyer, South Africa's Vodacom Group, ready to make a massive move. All right, so we know who's who. Now for the really juicy part. How did control of this massive company actually change hands? Because when you look at the numbers, they tell a fascinating story. So check this out. Before the deal, things were pretty balanced, right? Both Vodacom and the Kenyan government had a solid 35% stake. But then, boom, look at the after column. Vodacom's ownership just jumps to a massive 55%. That's controlling interest right there. At the same time, the government share drops all the way down to 20%. And Vodafone's little 5% slice, it just gets swallowed up by Vodacom. And this chart just makes it crystal clear, doesn't it? For the first time ever, one company, Vodacom Group, has the outright majority. That huge 55% slice of the pie, well, it means they are now, without a doubt, calling all the shots. So if you boil it all down, the takeaway is simple. Vodacom is now in charge. Period. And that is the single biggest change here. Which, of course, brings up a massive question. Why in the world would Kenya let go of that much control? And that's where we get to Kenya's side of things. I mean, think about it. Why would a government sell off a huge chunk of its most profitable company? This is literally a crown jewel of their economy. The answer? It comes down to one really, really big number and an incredibly ambitious plan. Here's the answer, $1.6 billion with a B. That's the mind-blowing amount of money the Kenyan government got for selling just 15% of its shares. We're not talking about pocket change here. This was a tidal wave of cash pouring right into the country's bank account. And here's the government's game plan, laid out nice and simple. They're not just going on a spending spree. Nope, they're investing it. That $1.6 billion is basically the startup capital for two brand new, powerful funds. The idea is to use this money to finally build those critical projects, roads, energy, water, and hopefully break free from relying so much on debt. It's that classic move, sell one super valuable thing to build a whole lot of other valuable things. Okay, so now let's look at the other side of the coin. What did Vodacom get for their $1.6 billion? Well, it turns out they got the one thing they wanted more than anything else, a straight shot at dominating the entire region. And this is what makes this deal so brilliant, really. The two sides wanted totally different things, but their goals fit together like puzzle pieces. Kenya was desperate for a huge injection of cash to build the country. Vodacom was desperate for total control to expand its empire. It was just a perfect match. Each one had the key to the other's problem. And for Vodacom, the wins were just massive. Full control, that means they get to pull all of Safaricom's incredible profits onto their own books. It means they can pour gasoline on the fire of M-Pesa, that amazing mobile money system. And maybe the biggest prize of all, this gives them the perfect launching pad to conquer the massive untapped market of Ethiopia. So let's just boil this whole thing down. When you get right to it, this entire complex deal is about one simple trade-off, one that both sides were more than happy to make. It's capital today versus control tomorrow. Look at it this way. It's a really simple exchange. What did Kenya get? A cool $1.6 billion in cash right now. What did they give up? Majority control of their most important company. Now flip it. What did Vodacom get? Full operational control. What did they give up? That same $1.6 billion. Simple as that. Now, of course, the Kenyan government will tell you they haven't given up all their power. The official line from the Treasury is that, hey, we've still got a 20% stake, plus we're the regulators, so that's plenty to protect the country's interests. But is it really? And that, right there, is the billion-dollar question that hangs over this whole thing. Was this a genius financial move, a masterstroke that's going to fund a better future for all Kenyans? Or was this the moment they sold off the family jewels, trading away long-term control for a quick cash infusion? The answer to that question is going to define Kenya's economy for a long, long time.